morning, and thank you for being with us for Day 2 of Freddie Mac Connect 2022. I'm Bill Carey, Interim Head of Strategic Delivery, Data Operations, and Technology for Freddie Mac's Single Family Division. Yesterday, Chief Economist Sam Cater provided you with some valuable insight on the state of the housing market and some of the trends that will shape its future development and direction. The adverse market conditions we face together make the road before us a challenging one, but not insurmountable. The theme of this year's Connect conference, The Power of Two, highlights Freddie Mac's commitment to being a value-adding partner in achieving your business objectives, overcoming the headwinds, and seizing the opportunities amid the uncertainty and volatility. From leading-edge market intelligence to state-of-the-art tools and technology, we strive every day to actively and appreciably contribute to your success in both good and challenging times. In pursuit of that objective, we have, over the past few years, been on a journey to what we refer to as modern delivery, an agile-based operational model that has transformed the way we develop, deliver, and improve the technology and tools our clients rely upon. Throughout this ongoing journey, we've adopted new organizational principles, business processes, and human connections that bring the entire spectrum of Freddie Mac's capabilities to bear in our pursuit of the industry's premier technology platform. Put simply, modern delivery is the foundation upon which we deliver maximum value to our customers with optimal speed and efficiency. That solid foundation has enabled us to effectively apply advancements such as DevOps and transition services to the cloud to enhance our technology portfolio. As we continue this journey and explore new horizons of innovation, we will continue to work closely with you, our clients and partners. Your insights and perspectives shape the direction and nature of our technology development and advancement. To the many people participating today who have contributed either directly or indirectly to the continual improvement and expansion of Freddie Mac's suite of technology and tools, I extend our thanks. To those of you who are new to us or haven't had a chance to work closely with us before, I invite and encourage you to do so. Your perspective and partnership enable us to leverage things like advanced data analytics, AI, and machine learning to help you keep pace with changing market need. Together, we have passionately pursued, prototyped, refined, and fielded a host of exciting new products in the last few years. Our ACE and AIM offerings are prime examples, enabling faster, less costly, safer loan originations, benefiting our clients and home buyers alike. Another great example of client collaboration is our partnership with servicers. Servicer insights along our journey to reimagine servicing together proved instrumental not only to new capabilities like Paid and Resolve, but also to the very way we collaborate with clients to meet their needs through purpose-driven technology change. When partners are connected and engaged, as we aim to be with the clients we serve, the power of two is considerable. On behalf of Freddie Mac's single-family business and its strategic delivery, data operations, and technology teams, I extend to you our thanks and convey our desire to continue building and improving our working partnership and our suite of technology solutions together. As many of you know, Michael DeVito joined Freddie Mac as CEO in June 2021. Since joining, Michael has successfully guided the company through a period of internal and external transition, as well as a rapidly changing economic environment. And as someone with more than 2 decades of experience across home lending, he has made serving you more efficiently and effectively a top priority. He is also deeply committed to our mission of making home possible. Today, Michael will welcome a special guest for an illuminating discussion about the future of our industry, our partnerships with stakeholders, and how we can advance sustainable, equitable homeownership across the nation. We thank ICE Mortgage Technology for sponsoring our executive fireside chat this morning. With that, it is my pleasure to introduce segment host and Freddie Mac's Chief Executive Officer, Michael DeVito.
Hello and welcome to Freddie Mac Connect 2022. It's my pleasure today to have the chance to talk with FHFA Director Thompson. We'll have a chance to ask her some questions and hear from her. But first, let me introduce her. Director Thompson is originally from Chicago. She's a graduate of Howard University and is one of the foremost experts in safety and soundness. She spent 23 years at the FDIC and has been at FHFA for some time, having led the Division of Housing Mission and Goals. She was confirmed as FHFA Director last June. So Director Thompson, welcome.
Thank you. Thank you, Michael, and thank you for having me today.
I know that we have over 2,600 registrants for this event from 1,200 different companies. And these are folks who are serving customers every day. They're working directly with homeowners and people who are seeking refinances and who are actively engaged in the housing finance system. So we're glad to have you. Anything you want to say to start?
Sure. First, I want to thank you for the opportunity to be here, and especially for the opportunity to have the conversation with people who have their boots on the ground, who are working directly with borrowers, and whose policies make the most impact for us. So we're just really happy that we can have a way to engage with people who really make a difference every day.
So you have a very deep background in financial regulation. And talk to us a little bit about how your career started and how that evolved.
Sure. So very interesting. I actually graduated in finance with a major in finance and a minor in insurance. And I started work right out of college at an insurance company. And to be honest with you, I never imagined a career in financial regulation. I didn't even know what financial regulation was, to be honest with you. I started my career in Milwaukee, Wisconsin at Northwestern Mutual Life, and then moved to New York City and ended up working for Goldman Sachs. And I worked at Goldman for quite some time on mortgage-related activities, and then left Goldman, and we moved to Washington, D.C., took 8 months off after having my second child, and I play golf every day. I still can't play very well, but long story short, I ended up starting my federal career at the Resolution Trust Corporation, which was the government agency that Bush 1 established to deal with the failed savings and loans crisis. And when that ended, many of the employees from the RTC started to work at the FDIC, and so I worked at the FDIC through various roles. I ran the capital markets desk and worked on just all kinds of resolution-related activities, and then moved to supervision. And when I left FDIC, I had served as the head of risk management supervision through the most recent crisis, the Great Recession. And I tell you, that was there were a lot of lessons learned there. Left FDIC to work at FHFA, and it has just been a very rewarding experience. It's really hard for me to find the words to describe how rewarding this experience has been. It's really hard to leave a job after 23 years. It was probably the most difficult career decision I ever made. But I can tell you right now, sitting here today, serving as the actual director of the agency, was probably one of the best career moves I've made.
No, that's wonderful. And before we go any further, let me just say thank you, because that's a career of service, and we're all grateful for that. I know we're all better for it. You mentioned you worked in the private sector, then you worked at the RTC and the FDIC, and now FHFA. You've seen the intersection between government and business and the housing finance system. What lessons do you draw from those intersections that you would want to share with this audience?
Sure. I think it's really important to have that combination of skill sets, because sometimes policymakers make decisions that impact operations. And when you make a policy change, and it's probably best for me to give you an example. So when we're thinking about the credit score model update, the credit score variable is used throughout the mortgage process.
Right.
So when we made the change, we had to think about, well, who's going to be impacted, what systems are going to be impacted, how long is it going to take to incorporate this update or this change throughout the process in every single system that uses that particular variable. And so just thinking about not just the change, but the impact of those changes is really important for us. The other thing that I would say is making sure that we not only understand the impact on the operational systems, but on the people. Sometimes when you make policy decisions, as you well know, it can impact, one group versus another. Are you targeting first-time borrowers versus, rate term refi borrowers? And so it just makes a difference in making sure that we cover the gamut in our approach. And before we make any policy decision, understanding how different segments and different stakeholders will be impacted is really important to us.
Well, in your experience in working across all those places gives you a place to gather feedback from, I would imagine.
Yeah, we get lots of feedback, but I can assure you, we really pride ourselves on transparency. We pride ourselves on making sure that we provide data. One of the things that we've really tried to do is make policy decisions based on data and facts and not just anecdotal hearsay. And we've also been very transparent about publishing data because we want to make sure that people have access to the same information that we have when we make some of these decisions. And as you well know, a lot of the issues that we have to deal with, or I should say the primary issue that we have to deal with regard to data, are the privacy issues and making sure that data is anonymized so that there are no, personally identifiable identifiers in the data that we release. So that's been a real challenge for us.
Yeah, and that's getting harder and harder to do, right? As we all want to learn more about the market and as we're trying to solve some of these more challenging problems along the way.
Mm-hmm.
Let me shift gears with you here for
Sure.
a minute. I know that diversity, equity, and inclusion are all really important to you, and they're very important to us here at Freddie Mac. And you're the first woman to lead FHFA and the first woman of color to lead FHFA, and I think maybe even the first career person to have risen to have led FHFA. What's all that mean to you, and how do you think about that in terms of the encouragement you would give anybody who's watching this and thinking about their career from a diversity perspective?
Yeah, so great question. And I will tell you that from my perspective, just having the opportunity to serve in this role has just meant so much to me because I didn't realize it, but a lot of people come up and they want to, have discussions. They want to be, they want me to mentor them, or they want to talk about my career. It's like, who really cares? And then when I start talking about it, it even gets interesting to me. Although while you're going through it, it really doesn't seem that interesting at all. There have been a lot of obstacles that I have faced and a lot of obstacles that I've overcome. There have been a number of things that have not been the easiest for me, but I certainly believe that we have to persevere and we have to just be transparent and be true to what we believe in. And if you don't stand for anything, you'll fall for everything. And so, again, I really think that making sure that people have a chance to even think about serving in, in roles such as the head of their agency or the head of their division. I think just having me in this role gives people the opportunity to say, well, there's an example.
Right.
And so I'm just trying to be a good example, although I'm not sure that works out every day, but I'm doing the best I can.
Well, it's an everyday opportunity, right? I mean, that's all it is. I like to think about Freddie Mac as a mission-driven company, and thinking about that in everything we do, and thinking about it comprehensively, right? In terms of liquidity and stability, consistency in the market, affordability, all of those variables. How do you think about mission? What does mission mean to you?
Sure. So mission means that for Freddie Mac, that Freddie Mac provides liquidity for the mortgage market and that borrowers and renters have access to safe, decent, and affordable housing. What it doesn't mean is that we are irresponsible in how we administer our mission responsibilities. And what I mean by that is during the Great Recession in 2008 and 2009, we saw firsthand how bad products, bad lending, and sometimes poor choices were made in terms of the mortgage products that borrowers were offered. And that resulted in a great number of foreclosures, probably the worst number of foreclosures ever, and just borrowers, being uprooted out of their homes and families having to move, without any regard to, safety and soundness. And so from my perspective, safety and soundness and mission work together. You can't have one without the other.
Right.
You can't have an extreme focus on mission because you have to have a foundation that is sustainable. And you can't have, all risk management. Otherwise, nobody would get a loan.
Right.
And so I just think that you really have to approach the mortgage liquidity business and providing liquidity from a balanced perspective. And I think that anything less than that does the nation a disservice.
Yeah, I think we often talk about it as both and.
Yeah.
Right? In the context of it's not a trade-off.
Right.
We have to find the places where the actions we take support both.
No, that's exactly right. I mean, it's easy to make a decision to buy a loan that has an 810 credit score, that has a 70% or more or lower LTV, or that has a 30% debt to income ratio. Anybody can do that all day long. And so we need to figure out what are the parameters whereby the enterprises can purchase and safely purchase loans that are not that are not risky from a credit perspective,
Right.
but they do take into consideration a borrower's willingness and their ability to repay. Some of the things that Freddie Mac has done recently, like the income reporting, I think is really important, or the bank using bank data.
Right.
I think the rental payment positive reporting is also very important. We've talked about this before. It seems to me like using rental payments as a part of an underwriting decision is something that should have been done years and years ago.
Long time
It's
ago.
natural. I mean, mortgage or rent is usually the largest payment that many people make every year, and to not have your rental payments count as part of the assessment of the determination of whether you're willing or able to pay doesn't make a lot of sense to me. These little incremental things can make a huge difference in the life of a borrower who chooses and wants to be a homeowner.
I couldn't agree more. I think we think of it as the strategies that help level the playing field.
Yeah.
Right? To your point, when the largest monthly obligation in every household is being treated the same from a credit standpoint,
Right.
then it levels the playing field
Right.
in a really positive way. And thanks for the shout out, because we're continuing to advance the work on using data and bank account data. As you know, we just implemented the use of cash flow, where we can see positive cash flow trends in a bank account. That's a positive way for us to recognize that one borrower may be more capable, and we should
Exactly.
give access to credit to those borrowers who demonstrate capability.
So I think that's right.
That's great. So we have a lot of folks, as we mentioned earlier, boots on the ground, folks serving customers every day. And obviously the market's going through a bit of a change here, right? We can see the market slowing down. What's your view on what's happening in the mortgage market and the housing market overall?
Well, my view is, first, it's not the worst we've ever seen, because we've already
Right.
experienced that. And that certainly refers to the Great Recession. We've also experienced unknowns during the pandemic, where people really didn't know to what extent this was going to take place, how long. There were just so many unknown factors in the mortgage market. And we got through both the Great Recession and we got through the pandemic in a way that I thought was very responsible as an industry. Anybody that's been in the mortgage industry for over 10 years has seen high interest rates. Anybody that's been in the mortgage industry for, a while has seen an increase in home prices. And I'd say that we haven't seen the acceleration happen as quickly as it has previously, but we have seen the combination of high interest rates. We've seen the high home prices. And what we haven't seen is this issue that we continue to have with the housing supply. And that really exacerbates the affordability issue, especially for first-time borrowers. So I would say that the market volatility is something that nobody can predict.
Right.
But the issues that arise from that market volatility are things that this industry can deal with. They're things this industry has dealt with, and I believe that they will continue to deal with. I think that many participants in the mortgage industry have the fortitude, the wherewithal. They've learned from the mistakes, and I think we're going to get through this and weather this storm.
I think you're right. I think if we bring forward all the learnings we have from all of those experiences that you talked about, it gives us a foundation to continue to be successful here.
No, I agree, and I tell you, when we went through in March 2020, at the onset of the pandemic, there was uncertainty everywhere. People weren't sure how long they were going to have to advance. People were asking for, liquidity facilities. There were just a lot of unknowns. No one knew how long forbearance was going to last, and nobody knew the impact on anybody's balance sheet.
Right.
And so I just think that the industry got through that. 2020 and 2021 were record years of acquisitions for both enterprises. Now, we had the lowest interest rates in history, and many people took advantage of the ability to refinance their mortgages. So right now, when I look at the credit quality of the mortgages that are on the books of Freddie Mac and Fannie Mae, I think it's one of the best books ever. I think it has a mark-to-market LTV of about 50%, and I'm not sure that I could or anybody could ever say that that's been the case. And so I think we're sitting in a really good place now. Of course, inflation and issues that impact individual borrowers, are things that we continue to work through, and looking at, loss mitigation activities in this high interest rate environment for borrowers that have very low interest rates,
Yes.
and just trying to figure that out.
Yeah, that'll be more complex for sure. I think if we see a cycle, when we see a cycle, we'll have to bring the best of our thinking to bear on what will be new. So let's look ahead to 2023. How would you describe your top priorities for both GSEs, Fannie Mae and Freddie Mac?
Well, we're in the process of issuing our public scorecard, where we highlight our expectations for Fannie Mae and Freddie Mac. We have focused, as you well know, on safety and soundness and access to credit. I think Freddie Mac in particular, and Fannie Mae, have put together different plans. You've got, duty to serve plans, you've got affordable housing goals, and you also have the equitable housing finance plans. And we're, again, focused on making sure that the enterprises step up in the roles that they were designed to step up in. They provide liquidity and play a countercyclical role if necessary to keep the mortgage markets flowing on both the multifamily and single-family side. So, we're just looking primarily at the safety and soundness, and also making sure that the enterprises continue to meet their mission, and that they do so, again, in a safe and sound way.
So again, the both and. Right?
And both, not either or.
Not either or, both and. Yeah, that's great. So you've talked a little bit about data and technology, and we've noted that FHFA has developed an office in this regard. Tell us more about how you're thinking about that.
Sure. So we have opened an office of financial technology I've been thinking about just the mortgage process. How long does it take from application to closing? It's about 45 days. It's been 45 days for probably 45 years. And that's it's not 45 years, but quite a long time. And the cost of closing, it's been, are there things that we can do to make the process more efficient, to make the process faster, and to make the process cheaper? Are there areas in the mortgage manufacturing process where we can use technology to really lower the cost and to bring some efficiencies to the process? And I'd say Freddie Mac, again, has really been a leader in this area by using the AIM for the asset and income validation process. So they validate the assets and income that are on a borrower's application. Right. They're just the day one certainty that it comes with the application. So there are places where technology can really make a difference, and they can also improve risk management because, it's a third party assessing data, and Freddie's assessing data, the borrower's providing data, and just to get that third party validation, I think is really important. But when we look at closing costs, we look at persons who were trying to refinance their mortgages, and it costs as much or more to refi than it would to just get a loan outright. And why is that? Are there things that we can do to really streamline the process and make it more affordable? Are there things that we can do to be more helpful to first-time home buyers to streamline the process and make it more affordable? And so we want to see if there are technologies that can be helpful in this regard. Of course, we want to make sure that we're being responsible and that we're testing things out. But we are really in an age of technology, and we want to see how that can be applied to the mortgage process.
Is there anything in particular you're thinking about with regard to maybe some of the populations that have been harder to reach, harder to serve, maybe have been underserved over time? I know that's a big focus. How are you thinking about that?
Yeah, so we have a focus on underserved markets. And like I said before, it is easy to acquire loans that have, stellar, pristine characteristics. But we want to make sure that we provide, safe, decent, and affordable housing to all, and all means everybody. And so when we think about underserved areas, we have the Duty to Serve program, which looks at rural communities. It also looks at manufactured housing, and it also looks at affordable housing preservation. We've got the affordable housing goals that look at income, low to moderate income areas, minority census tracts. And we also have the equitable housing finance plans that focus on communities that previously have had barriers to home purchases. And I think you guys have a plan that looks at Black home ownership and Hispanic home ownership. I think Fannie has a plan that looks at Black home ownership, and I think they're working on individual populations. And so I think just implementing and executing those plans, and a big part of those plans are the special purpose credit programs and working with lenders to see what works, what doesn't work, what can be institutionalized, what can be moved or changed from a pilot to a program. I mean, we're really looking into, what sticks, especially in underserved areas.
Well, and we have to learn, right? We have to test, learn, repeat, and keep pressing forward.
Right.
So I want to thank you. Sure. Thanks for making the time to come do this.
No, I want to thank you, and I want to thank all of the stakeholders that are participating today, and everybody at Freddie Mac for the work that you all do each and every day.
So thank you very much to everyone who joined us today, and Director Thompson, thank you so much for your time.
Thank you.